Well, NALCO has managed to deliver a good set of numbers in Q4. Expectations were anyway high, and they've still managed to beat those lofty expectations. Remember that LME Aluminum prices had reached record levels of $2,700 per ton, and NALCO is a great beneficiary of higher LME prices thanks to the number of captive mines and captive input sources that they have. So yeah, revenue very strong with a 64% jump up seen over there at 2,821 crores. The EBITDA is really where there was a big beat, close to 935 crore rupees, leading to margins coming in at a lofty more than 30%. This versus our own expectations of it being in roughly the 20% range. This versus the corresponding quarter margin of 10.8%. Further, we also did have the profit after tax coming in at 935 crore rupees. Now, the reason behind that is that there was a tax credit of 97.4 crores, which did lead to that figure being very close to the EBITDA figure as well. Now, Mr. Sridhar Patra says that LME aluminum prices, though, cannot be sustainable at $2,500 per ton. He says that prices can be expected to be above $2,300. But he adds that the fiscal year looks strong because demand looks strong. The industries are restarting, and he's seeing that traders seem to be stocking up on the metal as well to cater to this, the entire supply chain. The cost of production, though, there's a big beat over there. Now, the reason behind that is that it is also partly owing to the reversals of renewal purchase obligations as per the notification issued by the Odisha Electricity Regulatory Commission. Employee costs as well has dipped on a sequential basis. So this is something that has caused the EBITDA as well to come in much, much higher, and of course partly aided by LME prices as well. Further, of course, the company has opted for the new tax regime, so there is a reversal of deferred tax liabilities too, which has led to a credit of 97 crores, further boosting the profit after tax. Now, the aluminium business has reported a good surge in the EBIT, almost a 273% jump up on a sequential basis at 590 crore. This is, I think, the highest quarterly aluminium EBIT we have seen. The revenues as well rose 19%. The alumina EBITDA as well came in at 296 crore, 65% higher. Remember that alumina has not shown the kind of strength that we have seen in aluminium, but now that as well has started to pick up. So it'll be interesting to see that how this plays out. Remember that NALCO does have good integrated mining operations. That makes it one of the best plays on higher LME prices. They've also managed to secure the mining lease for Utkal E, which is a coal block, and we had Sridhar Patra saying that with Utkal D and Utkal E being operationalized, the mining capacity will now be 4 million tons. The captive mining of coal versus the cost of purchase from MCL is actually cheaper by 200 to 300 rupees per ton. So that will further add to NALCO's bottom line.